Hi, my name is Christian Waldegrave, Manager of Research at Teekay, and this is our tanker market update for November 2013. Well, the last couple of months in the tanker market, September and October, were very weak. In fact, we saw VLCC and Aframax rates down to about $10,000 per day, and Suezmax rates were down as low as $5,000 per day. And that time of year usually is the weakest time of year for tankers. It's when the refineries go into maintenance during the autumn months. During this year as well, we also saw a decrease in OPEC crude oil supply, and that all affected the tanker market and meant that rates were very low during those months. However, in the early part of November, we have seen an uptick in crude tanker rates, especially in the large crude tankers, and VLCC rates have actually hit $30,000 per day in the early part of November. And that's actually the first time that VLCCs have hit $30,000 a day in November since 2010. Usually we see the strength in crude tanker rates coming in December, but this year it seems to have come a little bit earlier, which is very encouraging. And the reason for the strength in the early part of November has been a couple of things. One is that the refineries are coming out of maintenance now and starting to ramp up their throughput ahead of peak winter demand. But also in China, we've seen that the Chinese have been increasing a lot of oil, not just for their refineries, but also for stockpiling purposes. In fact, crude imports into China last month were a record high at about 6.3 million barrels per day. And so that means that the VLCC market has been very active, and also we've seen a lot of oil movements long haul from West Africa to Asia. And next month, West Africa to Asia oil movements are expected to be the highest of all time. So that means that the VLCCs are active, they're getting pulled out from West Africa to Asia, and that in turn has then pulled up the Suezmax market, because the Suezmaxes are then having less competition for cargoes in West Africa. So we've also seen Suezmax rates increase to about $20,000 per day. The Aframax sector has been performing a little bit worse. Aframax rates are still about $10,000 to $12,000, $13,000 per day. And that's due to some particular regional things that have affected Aframaxes, especially in the Mediterranean. We've seen that there have been some new supply disruptions in Libya, and that's meant fewer cargoes in the Med and lower Aframax rates. However, as we move into the winter months, we would expect that the usual winter supply disruptions will mean that tanker rates should start to improve a bit as we go through November and into December. So things like weather delays through the Bosphorus, ice in the Baltic, and just the normal bad winter weather and shorter daylight hours mean that we usually get more transit delays and better rates as we move further into the winter. So it's a good start to the winter for the tanker market, and we expect that that will continue through Q4 and into Q1. And then looking to next year, we see that the outlook does get a bit better for crude tankers. A lot of that's due to the fact that the crude tanker order book is really rolling off now. And especially if we look at the Aframax and Suezmax sectors, for next year and for 2015, we see very low, almost zero fleet growth. In fact, for the uncoated Aframaxes, the fleet will probably shrink a little bit next year and into 2015 as well. So with almost no fleet growth on the crude tankers, and especially on those medium-sized crude tankers, you don't need very much demand growth to get better utilization rates and therefore better tanker rates. And in fact, the IEA's forecasting just under 1 million barrels per day of oil demand growth next year. So we do think that tanker demand will rise by somewhere around the 3 to 4% mark. So with virtually no fleet growth, we do think that the rates will improve going into 2014. So that's our outlook for the conventional tanker market, and we'll speak to you again next month.